we still believe the future for investment in renewable energy remains incredibly positive. The sector is backed by supportive governments in the UK and mainland Europe. As they expect to quickly electrify their economies, and we believe Foresight Solar is incredibly well positioned to take advantage of that as well.
Hello, you're watching Proactive. Joining me is Foresight Solar Fund Manager Ross Driver. Ross, very good to speak with you. The UK Met Office announced March and April had some of the most sun hours since records began. How's your portfolio performed so far this year?
Hi, Stephen. Well, good to be with you as always. Yes, in terms of that, well, it's fair to say the first couple of months of this year weren't the best for solar resource in the UK, but we had that record sunshine there in March and April, which have meant the portfolio on our main markets performed particularly strongly. For the UK, our electricity generation was about 9.5% above budget for the year to 30th of April. And if we take out the network outages that are outside of our control, it was about 12.5%. Spain and Australia did suffer from some lower generation due to lower irradiance there, which is part of having a balanced portfolio. But global generation for the portfolio was 2% higher when you include those network outages. So I think the good news for us and solar generation is the budget's back on track following a lower radiation year in 2024. And the operation portfolio continues to generate cash that gets paid out to shareholders via dividends. And that's what we're looking to provide.
Ross, you've executed new hedges to fix power prices for the next couple of years. What's the importance of this proactive approach? Where are you with it now?
Well, that's the thing. The sales of electricity make up about half our revenue in total that we're coming out alongside the subsidies as well. So our proactive power price hedging strategy is one way to lock in these advantageous electricity prices. And we essentially agree to a price for consumers to buy the energy from us. This ensures a look ahead over the coming years, and it gives us income visibility and supports that dividend cover for investments. So in the last few months, with the strategy that we've put in place, even though power prices are falling in the market, we've been able to strike agreements at levels that we see as accretive to dividend cover. And that brings the average head price for our UK portfolio. It's between 80 and 85 pounds between sort of 2025 and 2027. And it also means that we've got 90% of our contracted revenues fixed for this year, about 71% next year, and about 62% for 2027. And we tend to build that hedging profile as we go forwards for the sort of short to medium term cover. And that all links into our confidence, particularly for this year, of getting a 1.3 times dividend cover for this year, and expect to generate more than enough cash to pay our dividend. And we think that's good. Foresight shares are currently yielding almost 11%. So we think that that's a very good investment proposition.
So it sounds like the income element of your strategy is well in train. What's about the growth portion of the investment objective? How's the proprietary development pipeline advancing?
Yes, well, as you say, we have this development pipeline of almost 1 gigawatt of solar and battery storage projects that are predominantly in Spain at the moment. And these assets offer that opportunity for us to capture value as they move from development through the construction and potentially to operational phases as well, if we don't sell them before. It's much in the same way that a plot of land increases in value once it secures planning permission, and then when you either build a house or a development on it. And we expect our pipeline will start bearing fruit this year, with the first project in our solar pipeline expected to reach ready to build status later this year. And we are also starting to see some positive momentum from grid capacity that we're bidding with our pipeline of about 400 megawatts of battery storage projects in the Spanish market as well.
Last week, you announced a formal proposal which ultimately didn't advance. Can you give us more details on that?
Well, this is more in terms of I think the actions and what the board have spoken about in terms of looking for all options and potential consolidation within the market. There's a range of factors that have been affecting the renewable energy infrastructure investment trust sector: higher interest rates, cost disclosure challenges. A number of these examples have pushed down share prices, increased discounts to NAV asset values, and unfortunately, Foresight Solar has been a no exception to that. In March, with the year-end report, our board announced its intention to explore all options available to provide the best possible outcome for shareholders. And this ultimately culminated in a formal proposal that didn't actually advance any further. I think in terms of what we can say, because of this company rules, that's we can't really say much more on that at the moment. But regardless, the directors will continue to evaluate all options with the potential to maximize value for shareholders at this present time.
So Ross, what's next for Foresight Solar?
Well, looking at this and addressing the share price discount to NAV is an absolute priority for us. We've taken steps to remedy this and look to address varying shareholder needs. These measures are a combination of longer standing initiatives and those that are more recent that will take time to yield positive results. We've got a share buyback program with an allocation of 50 million at the moment. It is one of the largest in the sector relative to the NAV of the fund, and has been returning capital to shareholders almost daily and driving that, well, a modest but an increase in NAV as well to offset the discount. There's a divestment program. The sale of Australia continues, and we are appointing advisors to move ahead with the divestment of an additional 75 megawatts of operational assets to look to prove valuations and recycle capital. We've lowered and made our management fees for us as the manager better aligned with investors. We've announced that new fee structure to align the investment manager's interests with that of investors based on the latest NAV current share price. That's delivering a saving of approximately 20% a year on those. And as the strategic options, what we've just talked about, the directors of the fund are evaluating all options with the potential to maximize value for shareholders. So despite the market turbulence at the moment, and there are other global geopolitical factors that we're aware of that are also impacting markets, we still believe the future for investment in renewable energy remains incredibly positive. The sector is backed by supportive governments in the UK and mainland Europe as they expect to quickly electrify their economies. And we believe Foresight Solar is incredibly well positioned to take advantage of that as well.
Also, hope you'll continue to keep us posted on your progress. Thank you very much for the update today.
Thank you, Stephen. Speak soon.
Ross Driver, Fund Manager of Foresight Solar Fund.